Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, you two. We're having some CPI data out, and it came in higher than expected.
Yes, it did. It was like 5.4% year over year, and that was about the highest since June 2008. What's interesting, you see these like line items when you drill it down, and it's like cars and trucks, used cars and trucks, up 45%. And anybody who's been car hunting knows that is absolutely
true. And yet, Bitcoin is going down. So much for being an inflation hedge. Yeah. Let's check in quickly with Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at 33,300 and change. Bitcoin is down about 3% over the past 24 hours. And the CoinDesk Ether price ETX index right now at 1962. ETH is down almost 7% over the day. And so, you know, things are getting more expensive, Lawrence. Bitcoin's not really acting like an inflation hedge.
No, it's not. And you know, also take a look at the 10-year yield. We don't have a chart of that, but if you take a look at the 10-year yield, it popped up a little bit, but it's still like lower than it was in the beginning of July, which was just like a few days ago. So there is no, it is a strange market in many ways, just because we know that the inflation numbers are going to check in at a little bit higher than normal because it's coming off of a low base from a year ago. But as far as that whole narrative of Bitcoin as an inflation hedge, I think the market is reconsidering it and saying, you know what, maybe this is as high as it can go right now.
Any explanations?
I mean, it's always been more of a narrative. I don't know if we've ever seen this actually evidence that Bitcoin really is an inflation hedge, right? It's like this whole concept, because Bitcoin has limited supply, that it's supposed to be a hedge against inflation. But there's some controversy about whether this is just like a cool story or if it's actually playing out in the market.
Yeah, there is a possibility that this is. There's a possibility that this is, in many ways, that narrative has been sort of grafted onto price, so a bubble, if you will. In other words, that you have these fund managers who looked at the price go up and say, oh, it's an inflation hedge, versus let me buy it first and then the price goes up. So you have that possibility that at least that's what it is.
All right, time will tell. Switching topics, Binance US is hiring a former California regulator as its new chief administrative officer in an effort to boost compliance and trust with both customers and regulators. The hire comes as Binance, the firm from which Binance.us licensed its branded technology, comes under heightened scrutiny and actions from a growing number of regulators around the world. Joining us now to discuss is Brian Brooks, CEO of Binance US and former acting comptroller of the currency. Welcome there, Brian. So before we get into all of that, I just want to show this tweet that you retweeted from Binance US, working on a couple of new things this week. Set notifications to on. Brian, do you have something to tell us?
Well, Christine, you should set notifications to on. That's what I would tell you.
No, look, we just don't want 5 minutes after this broadcast that you have a big announcement and we didn't get a chance to talk about it. So,
look,
all right.
Christine, I really appreciate the opportunity to talk about this. I got to be a little bit careful what I say, but suffice to say, Binance US is on a tear in a whole bunch of ways. Market share is looking very strong. Hiring is looking very strong. One of the things that you expect to see in a growing exchange is access to the widest possible scope of legal assets. And so without getting into any details, I would just say you should watch this space in the next 24 hours for good news and coming news over the coming weeks on our growth story. So there's new stuff coming to the platform.
All right, notifications on. You know, Binance US is hiring Manuel Alvarez, a former commissioner at the California Department of Financial Protection and Innovation. Binance US was founded by Binance CEO Changpeng Zhao, from what I understand. But Binance US likes to keep itself very independent from Binance, which is facing regulatory scrutiny in numerous countries that are not permitting what is the world's largest crypto exchange to operate in their jurisdictions. And are causing certain banks to block customers from using their cards on their platform. Is it fair to say that this hire is part of the reason why there is a need to stack more former regulators at Binance US?
Well, look, Christine, what I would say is the purpose of Binance US in the first place was to serve regulated parts of the world. So if you just go back 4 or 5 years to when Binance.com was first founded, most of the world didn't have a thesis for crypto regulation. Certainly the United States didn't have a coherent approach, and most countries didn't really either. And so at that time, crypto exchanges were basically websites and mobile phone apps that allowed people to buy and sell Bitcoin for fun and profit. In the ensuing 5 years, countries, including the US, parts of the G20, and some parts of Asia, started to adopt a regulatory climate. And so it's increasingly important for companies that want to serve those parts of the world to have regulators on staff who understand the way that licenses work, supervision works, the consumer protection works, and everything else. And Binance US was a company that was specifically built to manage regulation. All right. And so it would make sense that we'll hire me, we'll hire Manny, and over time we'll hire more people of that background because our purpose is to serve that part of the world, starting with the US.
Brian, welcome back. It's always great to have you on the show. So going back to Christine's question, though, like all these regulatory actions that are happening all over the world, Binance is facing scrutiny from, Thailand, Canada, UK, just kind of like a domino effect. Is this coincidental? Like, why does this seem to all be happening in the span of a few weeks?
Well, what I find a little bit more interesting, Emily, it's a great question, but I think it's interesting how much attention Binance gets versus other exchanges who have had those exact same issues. I mean, without naming names, I can think of other companies that are very highly regarded that 2 and 3 years ago had these very same issues with foreign regulators and foreign banking partners and others. And so, look, I can't speak for Binance.com because that's not my company, but having experienced that kind of thing myself, it's a natural part of the maturation process where you launch a company, which is basically a tech company. You then run into traditional financial services regulation, which itself is going through its own maturation process. And at some point, you have to come to an accommodation where you hire the right people and build the right internal controls to be able to function in that kind of a market. Again, at Binance US, we have a little bit of an advantage because we were built for that purpose. I mean, we do have licenses to operate in 43 states and gaining on 50 at this point. A lot of other countries abroad don't have that experience yet, but they'll get there. I feel confident. I've seen it happen at other exchanges, and there's no reason to think it won't happen on the Binance platform.
The U.S. is known as being one of the more challenging places for an exchange to do business. So if you could just explain, what are some of the specific risks that you face in the U.S.? Like, what are some of the regulatory actions that you're trying to avoid in the U.S. context specifically?
Well, some of this is going to be familiar to any of your viewers, which is, I would say that the SEC hasn't made a ton of progress in providing any kind of clarity for customers or for exchanges about which kinds of things are subject to securities registration requirements and which kinds of things aren't. I mean, wouldn't it be amazing if they would spend some resources and tell us, do they think Cardano is a security or Solana is a security or whatever? I tend to think those things aren't, but there probably are some tokens that are. And in the meantime, it's up to the industry to apply multi-factor tests and make the best educated guess. It doesn't have to be that way. We don't ask truckers to guess what the speed limit is, and it's not clear why exchanges should have to guess what things are securities and what things aren't. But in the absence of any clarity, we come up with our best solutions. What I think is interesting, though, is a lot of the same people who claim to want to bring crypto under some kind of regulation, and I count myself among them, by the way, are the very people who have criticized other efforts to bring crypto activity inside of a regulated system. So I look, for example, at what we did at the OCC on my watch, where we attempted to create some clarity about how banks can interact with crypto. And the whole point of that was to make sure that an existing regulatory framework can be applied to the activity. But a lot of the same people who say that they want more regulation in crypto are opposed to the idea of crypto occurring in a regulated space. So I think we need to get over that schizophrenia and get a grip on the fact that this is a large and growing market. Okay, people have made a judgment to the tune of $2 trillion of capital commitment that they want to participate. And so it's no longer a question of, is the market going to be here? It's now a question of, is the purpose of regulation to impede the market or to facilitate and streamline the market? And I hope it's the latter.
So quickly, just while you're talking about the SEC, Elizabeth Warren has basically said that the SEC should regulate cryptocurrency exchanges in the United States. Do you agree with that?
Well, what I think, first of all, is there's a lot of complexity to that claim, because if the reason that Senator Warren and others are making that claim is because they believe there's manipulation in the market, and that's what they've said, we have a market manipulation regulator in the United States, and that's the CFTC, right? So the CFTC has plenary jurisdiction over market manipulation in spot markets. Having said that, we've made a policy judgment in this country that spot markets generally shouldn't be subject to registration and disclosure regimes for a whole bunch of reasons. The main reason being that farmers who are delivering bushels of soybeans to market to sell for cash shouldn't be subject to some sort of constraint on their ability to do so. So the concern is that if you take spot Bitcoin markets and subject them to regulation, why do you think that kind of regulation is not going to come for the grain markets and the soybean markets and the orange juice markets, where for 60 years we've had a consensus that that would be a really bad idea? So I envision that there's going to be some kind of a turf issue between the CFTC and the SEC if you subject exchanges that aren't dealing in securities to securities-like regulation. Because again, there's a reason that we treat securities differently from commodities. It's an important reason. And if we're going to revisit that, we need to think about all of the implications. It will not stop at Bitcoin.
Hey, so Brian, welcome back. I think, I'm looking to take a vacation about a month from now. So you've been on so many times, I think you could be a replacement for the week. But in the meantime, we have, along the lines about security regulations, we had Warren Davidson on a few weeks ago, and we were talking about stablecoins, and he sees them potentially as securities, not just stablecoins. That the reason being that if you have the assets backing those stablecoins that aren't 100% cash in the bank or cash equivalent, such as U.S. Treasuries, but instead corporate paper, commercial paper, that they're pretty much the equivalent of open-end funds with an NAV, and you have it priced at about $1. And he sees that as something that needs to be regulated as a security. So as someone who was a former regulator, what's your take on that? Is that something that potentially makes sense for certain types of stable coins, such as the Tethers of the world and maybe even USDC?
Yeah, well, look, I think the devil is in the detail of what is behind the stablecoin. So as you know, when I was at the OCC, both the OCC itself and then later the President's Working Group on Financial Markets put out guidance about what kinds of stablecoins aren't securities. And if you remember, the SEC fast followed that guidance with its own statement that stablecoins that meet certain conditions aren't securities. So what we were really focused on was true payments instruments stablecoins. Stablecoins like USDC, like BUSD, the Binance token, and some others, where the tokens are 100% or greater backed by bank deposits and short-term U.S. treasuries. And I don't think there's a lot of argument that that kind of stablecoin isn't a security. That kind of asset really is just like a prepaid card. So if you think about the Bed Bath & Beyond card that you buy at the grocery store checkout counter, nobody thinks that that is a security. That's something that you add $25 to, and now it's worth $25. And the fact that there are dollars in a bank account backing the redemption doesn't mean that it's a security. The purpose of securities regulation is to protect people from mismanagement. And so I think the point that Congressman Davidson was making, Lawrence, and that you're making, is if you have a stablecoin that really is more like an exchange-traded fund or a money market fund. In other words, somebody's making a bunch of investment decisions about what's behind that, and the redemption rights depend on how well the management team does that. Well, right, that feels a lot like a security. Then you need to know, who are these managers, and are they good guys or are they criminals, and do they have a history of fraud or not, and what are the assets? So I differentiate the stablecoins that comply with the OCC guidance we put out, which are clearly not securities, with other kinds of things which are, as you say, backed by corporate debt, backed by a series of long-dated bonds or some other things, in which case maybe you're dealing with an ETF, I don't know. But I think in the end, the role of stablecoins in the crypto ecosystem is to have a price-stable unit that never requires you to leave blockchain, and that ultimately is going to mean fiat-backed stablecoins that are price comparable to the dollar.
Nonetheless, I mean, you allow on Binance US, you allow Tether on there, correct? Is that are you guys now? Are you getting them at a discount, or are they at par? In other words, when they come onto your exchange, is there any agreement that you have with Tether or with even US with USDC with Circle to get them not at par onto your exchange?
Well, look, first of all, we run a matching engine. So we're not buying tokens, putting them on our exchange, and then offering to others. We have a matching engine that allows buyers and sellers to come together. So we don't have any special arrangement with either of those companies. And of course, USDC is not currently, a significant asset that, it's an available asset on Binance, but it's not an asset that, we endorse over any other asset. Tether is the interesting case, and I have to confess, I'm not an expert into kind of Tether. You might think of it as Tether 3.0. But I think we're all aware of the problems Tether ran into a couple of years ago, and I think that's what led it to change banking relationships and change some of its backing. But I come back to the main point, which is, at the end of the day, if I'm a securities regulator, I'm looking at what aspect of the price is dependent on a management team, such that an investor needs to know who those management team members are and what their strategy is in order to value it. With Bitcoin, with USDC, with others, there's not a management team who's making investment decisions. In the case of USDC, it's dollars in the bank. In the case of Bitcoin, it's an algorithm operating on a network of computers. But if it's something different from that, sure, there's a legitimate question. Coming back to the Senator Warren point, though, most assets in crypto are decentralized algorithmic assets. There is no management team. And so my question again is, why do we think those things should be regulated like Ford Motor Company stock when they're really nothing like that?
But do you think you'll keep that on your exchange? Do you think you'll keep Tether on your exchange, or will you review it and potentially take it off? And do you think that Circle going public adds an element of scrutiny both to your exchange and to Binance in general, Binance.com?
Yeah, I don't think Circle going public does that. I think Circle going public is a great thing, because I think the more crypto projects that are in the public domain in terms of ownership, the more it demonstrates that those projects have been looked at by the SEC. They've now, had disclosures made to the public, and generally there's a mainstreaming going on. I think it's good in the same way that the Coinbase IPO was a good thing for the ecosystem. As far as assets on our platform, like all of the other US-based exchanges, we have a really rigorous framework that we put all of the assets through, and we don't list things that our framework tells us are securities. There have been I can't say the exact number, but a double-digit number of tokens we've looked at that have failed our framework, and so we've refused to list those. But suffice to say, anything on our platform is something that has passed, a framework that outside lawyers have blessed.
Mm-hmm. Brian, just shifting topics again. So there are a lot of staff changes happening, hirings at Binance US, and it makes me think of a lot of changes in terms of staff. Binance Chief Finance Officer Wei Zhu left the company earlier this year. Was he ever involved at Binance US or on the board?
No, so Wei was a board member, no secret about that, a super smart guy who, at an early stage of the company helped bootstrap it. Remember, the history of this company is not nearly as mysterious or secret as people seem to think, and I'm happy to shed a spotlight on it. There was a time when Binance.com served all markets in the world, including the US. A couple of years ago, maybe 30 months ago, a judgment was made that, hey, US regulations gotten to a point where you need a different structure. And at that point, the founder of Binance said, Binance.com can't serve that market. We need a different company with local management. And at that time, Binance US was created to be the locally managed US licensed company. No mystery about that. And in the early days, obviously, a lot of the technology had to be bootstrapped from Binance.com. We had a couple of board members who were from Binance.com and a board member who wasn't. Now we're going through a maturation process, right? We're doing a fundraise. We're putting U.S. investors on the cap table. We're adding U.S. people to the board. All as part of a maturation process. There's no big secret about that. And as I say,
is Wei still part of the board?
He's not. No, as you point out, he's left the company, but he was on the board for a while.
Right. And is this connected to why former CEO Catherine Coley was also transitioned out?
Yeah, look, I wasn't here at the time that those decisions were made, so I can't really comment on that. All I can tell you is from the time I started, the commitment that I sought before joining the company was we're going to be a U.S. managed company with a U.S. majority board of directors and U.S. investors built to serve a regulated market. And, that was the deal that I struck coming in. And thus far, it's been nothing but respected. I've had full reign to run this company in a way that works in this country.
So, quickly, I guess from the topics here, what do you think about what's happening in China? That China appears to be cracking down on cryptocurrency. Just taking off your Binance hat for a second. How serious this and how big a deal is it for the global cryptocurrency market?
I mean, look, obviously it's a big deal. I mean, I heard you all talking at the opener about why Bitcoin prices aren't moving, given that inflation is being baked in. I would argue that the price of any asset incorporates all of the available information about the asset. So I would actually take the other side of what you were saying. I think Bitcoin clearly is an inflation hedge. And that's why the price is 32,000 and not 8,000, where it was when all of this money printing started. But the reason it's not 64,000 is partly because of China, right? I mean, there is a global demand issue. And when China makes it very, very tough for the banking system to process payments in and out of crypto exchanges, when it's very hard for people to access crypto over the local internet because of the Great Firewall and things like that, obviously it changes the demand side in a significant way that's not positive. What I think the most important thing about the Chinese moves are, though, is it illustrates an interesting choice for the U.S., which is there's some forces in the U.S. who seem to want to take a China-like approach to Bitcoin regulation, which is China has banned Bitcoin or at least made it very difficult to buy. Maybe we too should ban it or make it very difficult to buy through hyper-regulation and other kinds of things. My thesis is there's an authoritarian way of handling economic policy, and you see that in China, and there's a market approach to handling the economy, which is historically what you've seen in our country. That is where you allow people free choice, you allow innovators the reign to take risks and to succeed or fail based on the merits of their projects. And I would say that the Chinese model is not the model that historically made America successful. So to me, the most important thing is what policy lessons do we learn from China's attempt to crack down on crypto?
So Brian, in your capacity as CEO, are you looking to expand customer service to include humans that would actually answer the phone at Binance? We're seeing a lot of these articles on the Wall Street Journal, primarily complaining about Binance.com, but these seem to be U.S. customers, for instance, who had large leverage positions, or actually global customers who had large leverage positions, lost everything, didn't get access to their bank, to their accounts. We have people complaining elsewhere about Binance US, and the thing that seems to underlie it all is there's nobody for them to talk to. So, are you looking to expand that kind of expand customer service to include actual humans to pick up a phone when called, who can help account holders get through their problems?
Yeah. So Lawrence, I am really, really glad you raised that issue. So the part of me that wants to point out that in the most recent study of customer support, it was a different exchange in the U.S. that had by far the largest number of customer support problems, and not us. But I'm not going to go there, because I think the more important part is we have a huge customer support challenge at Binance US, and I am very aware of it. So on your point about getting somebody to pick up the phone, my head of customer support is going to kill me when I reveal that we have now launched live chat. That is an innovation that we launched last week, and we're seeing enormous uptake on it. So that is something that you could argue we should have done 6 months ago, but it's now live, and it is solving problems in a way that we could never have done when it was purely done through electronic tickets submitted through the portal. It's a great point. And I will also tell people that come October, we'll be fully functional with our customer self-service application on the app, which will allow people to do things like reset their two-factor authentication when they've lost their device. It'll allow people to unlock their account when there's been, a suspected risk management incident or whatever. And so I think by the time we get to October, we will have not only had live chat for several months, which is now live, but we'll have a self-service feature that will solve the large majority of issues. And along the way, onboarding will become a lot easier as we expand our fiat rails. So we are very aware of these issues. I don't want anyone to think that we are not paying attention or that we haven't decked hundreds of personnel resources to this. But
I'm sure users will appreciate that, Brian. Just quickly, we've got to wrap up, but the one final question I want to ask was about ProPublica. They've done some reporting that Binance US, which Binance launched with BAM management, received over $60,000 in PPP loans last year. Why did Binance need these loans?
Look, I wasn't here at the time, so I can't speak to what the thinking was. I mean, I think at the time that like Ivy League universities, major corporations, all kinds of people in the middle of a crisis applied for PPP loans. Some of those people gave them back. Others of the program had, very few constraints on all of that. So I don't know is the answer, but I also know that lots and lots of businesses, large and small, qualified and applied. You can make judgments about whether that was the right way to design the program, but I don't. I'm sorry?
Would you be paying it back?
I've spent no time on that at all. But so my understanding, actually, I'm just being told, is it was paid back. So thanks for asking.
Okay. Excellent. Thank you very much, Brian, for joining us.
Thanks, everybody. Good to see you.
Thanks.
All right, that was Binance US CEO Brian Brooks. Coming up, checking in on Asia and the crypto markets update with Epiphany.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
As the company that launched the world's first ever Bitcoin ETF, we at Purpose chose the CoinDesk Bitcoin Price Index, the XBX, to price our assets.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Our next guest is a crypto-friendly Pennsylvania Republican and ranking member on the Senate Banking Committee whose Bitcoin and Ethereum trust holdings total as much as $30,000. Joining us now is U.S. Senator Pat Toomey of Pennsylvania. Welcome to the show, Senator. So over the past 2 months, you've raised concerns over burdensome crypto regulations and the need for continued development of private digital currencies. Perhaps you can articulate what the problems are and what needs to happen in the United States.
Well, the way I think about it is this is a fascinating and really important new category of innovations, new platforms for decentralizing probably all kinds of transactions and record keeping. And it's a very, very exciting space that could lead to a more efficient economy and more opportunity and lower cost for consumers. So from a policymaker's point of view, I want to make sure that we don't impede the development of this really exciting new category of innovation. And I think there are some voices that would rather impede that development and get in the way. And I want to make sure that we strike a sensible balance between providing, if appropriate and where appropriate, sensible consumer protections without stifling the opportunity for innovation in the private sector.
You mentioned impeding its role. Last week, U.S. Senator Elizabeth Warren told the SEC at the end of this month to figure out its role in regulating cryptocurrencies. Do you agree with her?
It's not at all clear to me that the SEC has a role in regulating cryptocurrencies. Cryptocurrencies are not securities, and the SEC regulates securities. So that's not at all clear to me that follows. And I'll be watching very, very closely to see what the SEC does.
Senator Toomey, welcome. What do you say to critics who say that you owning crypto and then calling for relaxed regulations on it is basically a conflict of interest?
Well, first of all, you got the order wrong. I was asking for a sensible and fair regulatory treatment before I owned crypto, not the other way around. But more importantly, look, I have owned financial assets for decades. I have my strategy for my personal investments is to have an extremely broad and very diversified portfolio. And I think a very broad and diversified portfolio should include some component of cryptocurrencies. And so I do. It's very modest in the overall context of my holdings. But it's just, this same logic would suggest that since I own stock in the S&P 500 ETFs, I can't have an opinion on tax or regulatory policy for our economy. How ridiculous would that be?
Nonetheless, Senator Toomey, we do have situations where basically legislators can act on inside information in ways that the average public can't. Would you be for regulating legislators, senators, and representatives the same way the general public is?
So what we are subject to that the general public is not subject to is very, very transparent disclosure. Every single month, I have to publicly list every investment I make, every sale that I make of any investment greater than $1,000. That's, I think, the appropriate mechanism. The entire world can see what members of Congress are buying and selling and what they're doing. And that it's not clear to me that there's anything beyond that that's necessary.
Well, it's not illegal for them to act on inside information the way it would be illegal for even a CEO or somebody, or just the average, dishwasher who gets a tip from somebody. They get punished. Senators and representatives don't. So shouldn't they be under the same amount of scrutiny, even though you have disclosures? I mean, you are public officials. Shouldn't you guys be under the same kind of rules that the average person is?
Yeah, look, I mean, if you've got an example where someone is actually trading on inside information that they have by virtue of their role in Congress, then I'd be interested in seeing that. I think that would be problematic, and it would be apparent, right? The entire world could see it because the requirement to disclose the transaction and whatever information the person had would presumably be discoverable. So I'm not aware of that phenomenon, but I'm not an advocate for insider trading on the part of members of Congress.
Good morning, Senator Toomey. Thank you for coming on our show. So I'd love to hear kind of your bigger picture argument. We get a lot of critics on the show of cryptocurrencies who don't see what the point is, think it has no value, think it's a threat to the US dollar. So when you're sort of saying that we need, the government to be more encouraging of private digital currencies, what is your main argument for why this would benefit the United States? Why are private digital currencies good for the US as a whole?
Well, I think the most important aspect of this, in my mind, is the underlying technology, the distributed ledger, decentralized ability to maintain records and conduct transactions has a tremendous potential. I think it's already in some cases being realized for payments, but all kinds of record keeping, all kinds of transactions becomes more efficient, becomes lower cost. It allows people to transact directly between each other rather than having to go through an intermediary. All of those things, I think, are conducive to greater efficiency, stronger economic growth, so it strengthens our economy. I'm also not particularly concerned about private currencies being some great threat. Let's remember, a majority of American history, the only currencies we had were private currencies, and we grew and became the biggest, most powerful country in the history of the world. So that doesn't particularly scare me. I think for cryptocurrencies generally to become widely used, there probably has to be some kind of stability in the price level. That's just the nature of currencies generally. If that starts, how's that going to happen? That's going to presumably require that currencies have some kind of backing to some combination of commodities or fiat currencies. That's a stabilizing feature. I think it creates tremendous opportunities for innovation, and we can't anticipate what they will all look like, but we should be very, very leery about putting brakes on such a dynamic sector.
You've been, if I understand correctly, you've been rather critical of this idea of the U.S. developing a central bank digital currency, like a digital dollar. But it seems like, the central bank digital currency era is here, right? We have China racing ahead, but not just China. All over the world, countries are developing their own central bank digital currencies, which will increase the likelihood that they will be able to trade directly with one another and not necessarily go through SWIFT or the U.S. dollar-based system. So what should the U.S. be doing to prepare for this reality? If it's not a digital dollar, what should they do? Because it seems like this is coming, right? And the U.S. does not want to be left behind.
I don't know that it's coming, and I'm not an advocate at this point for a central bank digital currency issued by the United States. I'm not sure what problem that's meant to solve. I think some of the biggest advocates for doing it want to do it in order that it be the first step to what later becomes a Federal Reserve offering and requiring bank accounts for every American. I think it's a terrible idea to turn the Fed into a retail bank. That's clearly one of the objectives. You look at our payment system, we've got very fast, very efficient payment systems. I don't see why the Fed needs to issue a digital currency in order to have fast payments. In fact, we have both a private and a competing Fed-driven real-time payment system. So again, I'm not convinced there's a problem that we have to solve in this space. I'm not at all interested in turning the Fed into a universal retail bank. I'm not a fan of having the Fed being able to track every transaction that American citizens engage in. So I don't see the case for why we need a central bank digital currency.
Senator Toomey, you reached out to Treasury a few months ago regarding what FATF was doing versus how FinCEN was looking at crypto. Can you explain a little bit about that? And have you heard back from Treasury at all?
Well, so let me just make the general point that it's not clear to me that we should adopt a regulatory regime with respect to crypto that is more onerous than the regulatory regime that applies to fiat cash. Obviously, cash is used for illicit purposes every day across America. We do things to try to minimize that or to try to control that. And I think you can make a case that comparable kinds of regulation ought to apply to crypto, but it's not clear to me that crypto should be subject to a more onerous regulatory regime that would discourage things like maybe self-hosted wallets or the adoption generally of cryptocurrencies. So that's what I'm pushing back on. I'm pushing back when I see a case where there's a proposed rule such as FinCEN's recent proposal where crypto would be treated in a more onerous fashion than cash. And that's the kind of thing I'm most concerned about.
FinCEN also proposed a controversial crypto wallet rule requiring crypto exchanges to collect counterparty information from people. Have you heard back from FinCEN regarding this proposed rulemaking around counterparty information?
I don't think we've gotten a direct response, but I'd have to check. It's possible that something came in very recently that I'm not aware of.
Okay. I mean, obviously, this is controversial because people are concerned about privacy and their data being released. So
yeah, and that's a legitimate concern.
All right, we'll be watching for those developments. Thank you very much, Senator Toomey, for joining us this morning.
All right, thanks for having me.
That was Pennsylvania Senator Pat Toomey. Time now to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. What are you looking out for this week?
Good morning. So, perhaps a surprise, perhaps not a surprise, but apparently Binance no longer has access to the UK's faster payment system. It sent a letter to customers this morning announcing that, basically any pound sterling withdrawals or transactions through the faster payment system would not be processed.
Nick, what else is going on this week? Anything else on your radar?
So this is a little bit crypto adjacent, but this week, the House Financial Services Committee is holding a hearing on what sounds like digital identity. And, it's not clear to me who the speakers are. It's not clear to me whether or not anyone from the, crypto world or even close to the crypto world will be speaking. But the fact that this is a hearing that's happening, in front of a fairly prominent committee means that there's a lot of attention being paid to this issue, and it's probably going to ramp up after this, I would assume. Digital identity, of course, has been one of the key things that people in the crypto industry have been talking about. How to sign on, how to handle things. Where does Web3 fit in? So I'm curious to see whether or not any of the issues and ideas that are discussed by this industry come up.
All right, thank you, Nick. Thanks for joining us this morning. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Here's our live look at Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at $32,523. Bitcoin is down almost 3% over the past 24 hours, and the CoinDesk Ether price ETX index is trading at about $1977, just under $2,000. ETH is down about almost 6% over the past 24 hours. And joining us now to discuss the crypto markets is Haohan Xu, founder and CEO at trading platform Epiphany. Welcome to the show, Haohan. So I wonder, your trading platform, what kind of volumes are you seeing right now? And does that give you some insight into an outlook on Bitcoin?
Yeah, so we're actually trading network, so we're connected to multiple exchanges. So we currently don't operate our own matching engine. But from what we observed, the market has actually been really stagnant. After the China crackdown. So volumes on Bitcoin was down 40% on major exchanges. But good thing is Bitcoin has been holding the line in terms of price. And we're seeing more insights on chain as well. There was a recent report that came out by Chain Analysis that shows that 73% of Bitcoin is held by investors actually, versus just a little bit like 58 or 60% for Ethereum, and around 40% for USDT. And actually, meanwhile, 7% all Bitcoin are held by traders. Like these are the people who are performing high frequency trading. Some of them are probably market neutral since they're just running arbitrage across the exchanges. Some of them bet on market directions, but I don't think 7% will be a large impact on the price. And this number is 18% and 20% for USDT. So we can see from the on-chain data that Bitcoin's main use case currently at this moment is still for investing in the long term, like most people are hodling. And Ethereum is actually being traded more often than Bitcoin compared to before. And we can probably guess that its main use is powering decentralized finance. And stablecoins such as like Tether, USDC are still the most frequently traded type of assets. And there are two main use cases that are pretty obvious: trade settlement or just parking money for opportunities. And also we've seen that Bitcoin dominance has dropped significantly this year so far. But good thing is a lot of money has been flowing to altcoins and Ethereum. So this is actually not bad news. It signifies more adoption into the general blockchain space.
Han, how do you see that relationship with the stable coins in the markets? And do you see them as potentially driving the doldrums, if you will? There's an argument being made that, in fact, it's because there aren't new additional stable coins such as, let's say, Tether since the month of May going into the market, that's why we're seeing this drop-off in volume, drop-off in price in Bitcoin and Ether, versus the other argument, which is the reason you're seeing a drop-off in stablecoins is because there's a lack of interest. Is it the tail wagging the dog, or are we seeing this kind of action in fact?
I actually don't think it has much to do with stablecoins. So the main drop in the market actually happened on fear, right? China's crackdown and the world regulators cracked down crypto exchanges. Binance obviously being one of the obvious ones. But stablecoins, in fact, has actually been doing really well. So USDC, in fact, has actually surpassed Tether on Uniswap trading. So Ethereum against USDC trading pair is actually one of the most traded pairs on Uniswap, versus before that was Ethereum against USDT. So I think in the stablecoin front, it actually has been doing quite well. And you see Coinbase recently is listing USDT. So I think on the stablecoin front, the market is actually having more proof of stablecoin. And I think having more stablecoin in the trading market especially will help liquidity and trade settlement. So I think it will be a catalyst for the space in terms of trading.
Interesting. One last question, Han. The CPI numbers just came out in the United States. Things are more expensive than expected. Bitcoin has been widely touted as an inflation hedge, and yet Bitcoin and the crypto markets are down. Do you have any explanation for that?
I think one of the things is a lack of upward pressure. So a lot of the demand actually came from China previously. So obviously I can talk about the crackdown here a little bit. I think the crackdown this time is very serious. It's very purpose driven, right? And it's definitely not over yet. So if you think about it, if China really did not like crypto, it would have done this crackdown in 2015, right? Or in 2016 when it was cleaning up ICOs. They were equipped with the same tools that they have today. But the crackdown this time, I think it's part of a much bigger capital markets control plan. And the plan is very evident through the crackdown crypto, what happened to Didi, the largest ride-hailing app in China, etc. So no one will really know the detailed agenda behind the plan. But one thing is obvious, that the crackdown crypto will help drive the stock market in China grow. So like, if you grew up in China, you know that like you only had a couple investing options, right? Housing, stocks prior to crypto. But now when crypto came out, crypto became the third option. So you see in China that recently they put on some market restrictions in the housing market. So like if you buy a house, you can't sell it, within 5 years. Otherwise, you get taxed. And then you see the crackdown on crypto. So that's being left with the stock market, and that's very evident, right? Since May, you see a lot of upward trend in the Chinese stock market. So I think they've achieved what they wanted to achieve. And and I think that justifies for a lot of why Bitcoin is falling.
Well, we'll continue to monitor the developments out of China. Thank you so much, Ho-Han, for coming on the show and offering your insights.
Yeah, of course. Thanks for having me.
That was Ho-Han Shu, founder and CEO at trading platform Epiphany. And that is it for First Mover. What a show. Thank you very much, Emily Parker, as well as Lawrence Lewitinn, for joining me. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.